Hey guys, Dr. Tom Carr here of drstocks.com. That's drstoxx.com. Hey, today I'm going to talk about one particular chart that everyone has their eyes on, and that is the chart of crude oil. Everybody and their grandmother is looking at this chart because it has been beaten down over the last several months or so for a variety of macro reasons, but it has been lifting off the bottom quite steadily and is in a nice uptrend as we speak. And it rallied about 3% today, and is very, very close to a very important breakout. I am bullish on the chart of oil, not only for chart reasons, but also because it was just announced today that Russia and Saudi Arabia are meeting together to discuss ways of reducing production, which should increase prices. So I'm bullish going forward. I see it moving up to the low 60s over the next several weeks and months, not without some pullbacks, of course. But one of the reasons I'm bullish is because here we have the daily chart of the WTI, the crude oil mini futures. This is a better chart to look at than some of your ETFs, the USO, the UCO. They're skewed a bit for a variety of different reasons, but the WTI gives you a pure chart of the price of oil. And as you'll see, as we draw a few trend lines here on the chart, you're going to see that we are in a nice inverted head and shoulders pattern. Whoops, let's do that again. Sorry, not the best drawer, but you'll get the idea there. We've got your left shoulder, your head in the center, deep head, and you've got the right shoulder. And we are just now back up to the neckline at around $51.35 per barrel, with some good momentum going there and lots of good volume. So I am predicting a breakout of this. Now, this particular pattern measures quite high. We're at the low of the head around $28 to $30 a barrel, and the neckline's around 50. So you're looking at a total price target of about $70 per barrel. I don't know if they'll get that high. The powers that be may not allow it to, but I would say low 60s for sure. Now, there's several ways you can play oil, and that is to buy one of the ETFs. USO is your non-leveraged version. UCO is your double X version. And UWTI is a triple X leveraged ETF on the price of crude oil. They don't exactly look like this chart, but they're pretty close. And if oil goes up, they'll go up as well. Another way you can play oil is to drill down to some of the stocks that trade in oil and profit from oil's rise. And one of those is, we'll look at the list here in just a moment. I wanted to build a very quick and easy screen for you to help you maybe do some of this work on your own. If you go to finviz.com, which is a free site, I subscribe to it for real-time data, but you can get the free version and use their screening tool. I've got a few filters in already. We're going to look at the basic materials, which is the broad sector that includes the oil stocks, and then I'm going to drill down to the independent oil and gas producers, because those are the guys that are really leveraged to the price of oil. As oil goes up, they'll go up as well. And I've got stocks priced over $7 per share, over 500,000 shares per day, average volume, because we don't want anything too thin. I'm going to suggest that all of our stocks that pass through the filter are priced above the 50-period moving average, because we want to make sure that they are in an uptrend. I'm going to add one more fundamental filter here, and that is a low price to sales. We'll say under $2 price per unit of sales. And that will give us stocks that are relatively undervalued. They may not necessarily be positive in terms of their earnings, but they're undervalued. And we'll hit the snapshot button and we'll take a look at a few of these charts. CRC is, in fact, a stock I bought today. Now, this is not in much of an uptrend, but it has broken out of a downtrend and had a really nice thrust up late September on high volume, has pulled back a bit and started to run back higher today. Now, this is one that will move very quickly. So if oil really does get into a nice rally breakout, you're going to see CRC run up to about the mid 15s or so. CRK is also in a nice uptrend. You can see that both the 20 period and the 50 period moving averages are both moving up nicely. And we're coming into a cup and handle breakout here at around 850 per share. So I suspect that will give a break once we get oil moving out of that inverted head and shoulders. Those are the two I like the best on this list. ELNK has been going sideways, but it's obviously in a nice uptrend. Looks a little bit toppy here, so I'm a little worried about that one. SGY is just a really wild stock to trade. It's been very flat last few weeks. Now, that it could break out, but I would wait to see if that it does so. SNN has been having trouble getting through the 9 level. That looks like it's a bit toppy, maybe not the best one to trade unless it gets back up above 9 on strong volume. So that's your list. I've got two stocks I like the best are at the top here, CRC and CRK, California Resources and Comstock. That's it for now. God bless you guys. We'll see you tomorrow. Bye.